Home builders are also the focus of our options up to date. And joining me now from the CBOE is Alan Knuckman with Trading Advantage. Alan, you're looking at the XHB Spider, which tracks the S&P 500 home builders. It's been a terrible 3 months for the home builders, but a pretty good week. How are you playing the options here?
Well, I like it because it's a momentum stock that's pulled back. I'm looking to get in on a discount. It's 10% off its recent highs just from May 22nd. So looking at this segment, we pulled back, and I'm looking at a very key level of technical support at 28 to hold. 27.5, 28 is about the 50%, the midpoint support also of the highs to lows for the year. So what I'm looking for is an option play, limited risk option play, an in-the-money call, and looking at the 26 strike. 26 was the breakout. Actually, it was a resistance in 2012, and then it was the breakout in January. So leaning on that level, the 26 call for March is going to cost about $425. And looking at that option, the break even on it's only $1 higher with 7 months for a good potential bullish movement here.
All right, Alan, and obviously the elephant in the room here is interest rate. And right now we are seeing rates back up. You know, yields on 10-year treasuries hit 2-year highs. Yields on 30-year fixed mortgage, it's about 4.4% off of a low of 3.3% just in November. So don't you think that's going to cut the legs off the home builders essentially?
I don't think so. I mean, a lot of people had a great chance to refinance and get in at some extremely historical all-time low rates. But if you put it in context, 4.5% is still a bargain if you look over the last 20 years. So I think the rates have climbed in optimism in the financial markets. They think that things, you know, that supply and demand has pushed those longer-term rates a little bit higher. Yeah, we bounced at 1%, but 1% after all-time forever lows. So I think as the financial markets come back, there'll be more and more appeal for housing. And to put it in perspective, this XHB is still 56 or 58% off the highs in 2006. We have a lot of upside potential left, and this is a market that has been strong and has momentum.
All right, if you pick apart the home starts numbers today, yes, they show an uptick in home starts overall, but basically that's because of new construction on multifamily home. And if you actually look at the numbers for the single-family homes, you see that home starts actually fell. What do you make of that disparity? Does that matter much for your strategy?
Well, not so much. It's more of a technical chart pattern that I'm looking at here and looking at the overall trend of this sector. But if you pick apart any numbers, you're going to find data that you want or data that you don't want. But looking at the big picture, here in Chicago is a good example. The market hasn't really come back that much in housing, but single-family homes have held very well in comparison to condos and multifamily. So it's interesting. If you look at some of the biggest investors in the world, Blackstone, for example, they've scooped a lot of single-family houses up as an investment, and there is a limited supply. And eventually that comes back around.
And just quickly, do you think that they've run up too high too fast?
No, I don't think so. I think this is a 10% pullback in this particular sector. I think it's a good opportunity from a risk-reward standpoint. Lean on that 28. We're around 29.25 right now. If it closes below 28 on a weekly basis, then it may be broken.
Alan Knuckman, thank you so much. We're back on the markets in 30 minutes. Bloomberg West is up next.